Hey everybody, I'm Andrew Silverman. I'm a Bloomberg Intelligence's tax analyst, and I wanted to take you through my most recent note. So let me just share my screen here so you can see it. Okay. It's about how courts are interpreting the Lober-Bright decision. That's the case that essentially killed Chevron doctrine. So what's Chevron doctrine? That's the extra discretion that courts used to give to the government, to Treasury and the IRS in this case, in interpreting a statute. Lober-Bright says that the government doesn't get to put its thumb on the scales when it comes to statutory interpretation. And in a recent case decided in January, the DC court said, the DC Circuit Court said that it will only agree with the taxpayer's view over a Treasury's view of a statute when the taxpayer's view defeats the government's view. In other words, the taxpayer's read of a statute has to be superior to that of the government in order for the court to decide to take the taxpayer side. So what's the standard for the best view of a statute? Well, in another recent case, the FedEx case, the court said that it will only take the taxpayer's view over the government's view when the taxpayer has captured the plain meaning of the statute better than the government. So on balance, the Treasury and the IRS get essentially the benefit of the doubt from courts, and all things being equal, the court will take the side of the government. Not so different from, in my view, what was happening under Chevron deference. However, without Chevron officially giving Treasury deference in tax cases, it puts companies at a disadvantage for purposes of a tax accounting. Why? Because AC 740 says that a company can only take a tax position into account when that company is comfortable that it understands how a statute is to be applied. Well, that becomes incredibly problematic when a statute is being litigated. It can take a decade or more for a court to decide how to interpret a statute, during which time a company is sort of left in limbo as to how to account for that new statute. But interestingly, in tax world, in a lot of cases, Congress gives Treasury and the IRS specific authority to interpret a statute. So in those cases, courts actually must give Treasury discretion because Congress has said that Treasury is the body that is going to be interpreting the statute. Taxpayers don't get a say. That's especially true with regard to transfer pricing, M&A, and also much of international tax, which has largely been defined by Treasury over the years. So companies like Emerson Electric, Molson Coors, Kellanova, those companies, a lot of their income comes from overseas. Treasury essentially gets to decide how to interpret the statutes that apply to those companies in those cases. And then lastly, I wrote about the Corner Post case, and this was decided in the same term as Lober-Bright. And in the Lober-Bright decision, the Supreme Court said that it wasn't giving taxpayers open season to sort of open up all these older cases that were decided under Chevron discretion and relitigate them, except that the Corner Post decision essentially says that taxpayers can do precisely that. Why? Because what Corner Post said was that there's this 6-year statute of limitations that during which time a taxpayer can challenge a regulation, or other guidance put out by Treasury and the IRS. But that 6-year window doesn't begin when the regulation is promulgated, which was the way that we used to interpret the 6 years statute of limitations. What it says is that you have to count that 6-year window starting on the date the taxpayer suffers an injury, and that could be at any time, of course. So even if a regulation was promulgated 50 years ago, if the taxpayer suffered an injury yesterday, it has 6 years in order to challenge that regulation, which essentially nullifies the whole concept of a statute of limitations and allows for all of these cases to be brought back up and for Chevron deference to be challenged in each of those older cases. So that's probably going to overwhelm the courts. We've already seen that starting to happen. So I have a little chart here showing the courts in which we have a judicial emergency, and you can see we have a judicial emergency in 20 courts at the moment. So not great for taxpayers, not great for companies who would like some clarity on some of these statutes, and will be trying to go to courts to get their views, which is what the Supreme Court says it wants taxpayers to do. So anyway, that's the note. Hope you enjoy it, and let me know if you want to discuss it. I'm happy to discuss it and answer any questions you might have. Thanks again.